lower time frame trading range, higher time frame point of interest. Okay, so on the 4-hour, let's see. Let's say we had this, the body never been tapped yet, and we have this wick right here above all of that liquidity. See that? Okay, these are the two reference points we have on the 4-hour. If you go to 1 hour, this is extremely risky because why? Trend line.
Yeah.
See that? A trend line is getting formed. Now, if you're going to expect a sell from here, you're just doing the same thing like a retail trader, nothing else. Same thing like a retail trader. Okay, so right away you can delete it. Right away you can delete it. But this right here, okay, this right here, this is a very high probable order block, right? Because look at this trend line liquidity being fed into a strong high. Okay, being fed into a strong high. So what you could do is sell it right away. Stop loss can go above the strong high and then target lower prices if you really want to. But for me, I do not like anything more than 5 pips. Okay, I don't like it. I don't like it personally. That's me. Okay, I want to see my stop loss always in between 2 to 5 pips. I don't use anything less than 2 pips. I don't use anything more than 5 pips. Okay, so I will always refine it. So now, how will I refine it? Inside of this 4-hour rejection block, okay, and a 1-hour order block, I'll go to a lower time frame. And then what do we have here? Lining up with that level, we have a, what's this? A breaker.
Yep.
Refining it to the breaker like this. Okay, I'm refining it to the breaker. And then now what makes the breaker high probable? Trend line liquidity fed into that. Okay, trend line liquidity. So now what I'm doing is I'm selling it. Stop loss can go above. Now it makes sense, right? Now this is, now even though this is my setup on trading view, I can't do this on MT4. Why? Spreads. Okay, I'll have to put it like 1 pip below and 1 pip above the original stop loss. Okay, first thing is I have to get tagged in, and the other thing is my stop loss has to be safe, right? Or spreads can take you out. Okay, but yeah, this is the original setup that I used. Okay, this is the original setup that I used. Okay, so yeah, like this. And then you're having that same target like this. Okay, then it's about waiting. Okay, then it's about waiting. So let's wait. Okay, let's go to 15 minutes. Let's stay here. Okay, let's see what happened. Okay, now they're starting to go up. And look at the reactions when they're giving when it comes near that trend line.
Yeah, they give you something.
Look at the rejections. Yeah, it's giving you rejections. Why? Hyping up. Okay, hyping you up. And then look what happened. Okay, look what happened. So we have this. Let's take it here. So we had this trend line liquidity and all of that stuff. And then, boom. Look at that. Okay, it just shoots up immediately. Okay, it just shoots up. Now, why are they doing that? Okay, why are they doing that? These moves are inducements too. Okay, these moves are inducements too, because look at this. This one single candle moved for 35 pips.
Yeah.
Okay, now what have you been taught? Do not jump in front of a raging bull. Okay, now who would want to sell this thing when it's coming up with this high momentum? Okay, everyone would think, okay, now the downtrend is broken. Now it's going to be an uptrend. It's going to be an uptrend. So everyone will start buying this thing. Buy this all over the place. They're buying this. But I told you, where is it right here now? An extremely premium price of this trading range. Okay, so now what can you expect? Quick moves outside of the trading range, because why? Their job is done. The job is done. Internal range is being cleared out, and then here it comes. Well, now they're coming down. Okay, now they're coming down. Yeah, immediately. Okay, and then now I don't risk 1% because I'm trading a 100K TMO count. Okay, now why would I risk? Look at this. That's 2 pips. Yeah, like $1,000 on 2 pips. That's a 50 standard lot size. Okay, I fear them. I fear them, honestly. I don't want a 50 standard lot size. So what I'm doing is I'm risking only around $100 to $150 per trade. Okay, so if I risk 100, that how much is that? A 5 standard. Okay, a 5 standard into 90 pips. That's $4,500. Now, what more do you need? Okay,
more than enough.
Yeah, now, because do I have any reason to parcel out at this area? No. Look at all of this liquidity. Why would price reverse from this? Okay, why would price reverse? And then, yeah, broke out of the trading range. Okay, broke out of the trading range. Now, then it gets even more better. Okay, what I'm doing is taking my partials, and where's the daily external range liquidity? Right here. Leave it like that. See that? Now look at the risk to reward ratio. That's the 1 to 207. Okay. Now, yeah, now that's not 207% of my account. Okay. I don't risk 1%, but yeah, I'm just showing you. See that? 2 pips
That's
stop loss,
yeah.
target. Okay. 400 pip target. Okay. So yeah, because all of these were planned. You see how well organized these trades are, right? Coming from the higher time frame. And we were taking we took this confirmation on lower time frame. That's it. Okay, we took the confirmation on a lower time frame, and then when price broke below this low, we know that a new trading range is created from this high. Okay, from this high, and then I told you, where will your attention go into? The candle that swept the liquidity. Like this. Now, what's the difference here? Here we could have directly sniped it with a limit, because why? It was a small range, right? It was refinable, but how could you refine a range of 35 pips? See that? That's the thing. Okay, so now you will have to wait for a confirmation entry. Okay, you will have to wait for a confirmation entry. Okay, so yeah, now let's wait. Okay, let's wait. Then yeah, now we have all of these obstacles marked out. Okay, let's go to a lower time frame and then wait for that. Okay, now we have the high marked out. Yeah, this happened on October, so I don't remember all of this properly, but yeah, I dictate of the sell. So let's see. Yeah, price is coming down, and here we have a break. Can you see that?
Yep.
Yeah, here we have the break. So now I did have a buy here. Okay, look what happened though. I had a buy here. I set my limit here because why? Came down, created the inducement, but it just wicked below my stop loss, and then it started going up. Okay, yeah. I don't even bother to see. I don't even bother to see what happened. Okay, because that happens. Okay, that happens. Nothing is perfect in the market. Okay, nothing is perfect. Okay, so like just because I took this loss, I'm not gonna go to YouTube and see what's the best strategy out there. No, I don't care. Okay, so yeah, if it just happens. Okay, it happens. So it just took me out. So we have a stop punt and a breakout structure. Okay, now what can we see? Now, if you go to the 4-hour, why did we mark out these areas as obstacles? So for the sell, okay, for the sell that's coming here, these areas will act as obstacles, right? Because they are unmitigated strong lows. Okay, unmitigated strong lows. So the same way, if you go to a lower time frame, now until price gets here, now this is your trading range. Until price gets here, because we are intraday traders, we can always hedge it upwards, right? We can always hedge price upwards. So when price is going up, let's say we had a buy from somewhere around here. So for this buy, there will be obstacle. What's the obstacle? Unmitigated strong highs now. See that? So we have this high right here, unmitigated. Stop hunt. And a breakout structure. Okay. So if we take it this way, what's this wick doing? Internal range liquidity. Yeah. Internal range liquidity. And right above that, we had an imbalance. Okay. Okay. So let's wait. And then now, yeah, like I said, price is fractal. So every single time frame has its own trading range. So we can use all of them. Okay. We can use all of those trading ranges. So what we're going to do is we have that marked out like this. Okay. Now, this is when the intraday fun begins. Okay. So let's see what to do. Yeah, I have to have all of these lines marked out properly. Okay, let's see. Yeah, now price is going up, and here you have a breakout structure. See that?
Yep.
First, it has to break outside of this, and then it has to give you a break. So then your lower time frame trading range would be from here to here. Yeah. Okay. So then if you take it this way, why is price coming down? It's to come into a discounted price to take out the internal range liquidity, right? So what's the internal range liquidity? Here we have a swing low. But imagine how many people would want to buy it from here because of that imbalance. Okay, that's the thing. Okay, you have to always pay attention. So what did I tell you? Okay, lower time frame trading range, higher time frame point of interest once again. Okay, higher time frame point of interest. On the 1 hour, we had nothing. 30-minute, still nothing. Okay, on the 15-minute, what do we have here? Right below the below the internal range liquidity, we have the body of the candle that swept the liquidity, never mitigated.
Yep.
See that? So what you could do is leave this area as it is, go to a lower time frame and refine it. Now, unfortunately, we can't go into the 1 minute because this is on October.
It's too far away.
You know that, right? Yeah, it's too far away. But yeah, now what you could do is leave this area as it is, put your stop loss below this wick. See that? On a lower time frame, there is always an order block right here. You know that, right? Higher time frame wicks, lower time frame order blocks. Okay. So yeah, like on this time frame, look at this. Equal lows even. We even have equal lows. Okay, perfect liquidity being fed into that. And yeah, we have all of that stuff marked out. We have that stuff marked out like this. Okay, but unfortunately, I couldn't take the buy. I had this marked out because why? This happened during Asia, and I don't trade Asia.
Okay.
Okay, so yeah, I don't trade Asia. I'll always wait for Asia to end because just think of it. What business does Asia have on GBP USD? That's the thing. Okay, so it's most of the time a consolidation. So I was waiting for Asia to end. Okay, like even during Asia, this played out right to the tick, Look at this. I'll have to refresh this. Give me a second.
So you normally wouldn't be trading Asia range, never, even though you know it sets as
no,
a perfect.
I will not. I will not. Like I don't even care if it plays out. Okay, I don't even care if the setup plays out during Asia. I'm not gonna trade it. Okay, that's the one rule I have. Because those days I used to trade Asia and I get burnt every single time I do that. Okay, like sometimes I'll have a buy and then London opens, it clears out and it goes.
Yeah.
Okay, so I don't trade it. Okay, I'm not gonna trade Asia.
And
so yeah, let's wait. Yeah.
For an intraday, do you like to, let's say, still trade New York or just focus on London or?
No, I trade both. I trade both.
Okay.
Yeah, because for me, that's the perks of living in Asia. Okay, now I can trade London because London is at 12:30, yeah, 1:30 p.m. New York is at 6:30 p.m. Okay, so I can trade both.
Yeah, it's amazing.
Yeah, I can trade both. Now, I think for you, London is around 2 a.m.
Yeah, I'm sleeping
that's the
at that
problem.
moment. Yeah.
That's because that's the thing. If you take a trade during London, we know that London has the most chance of making the high or the low of the day. Okay, we know that. So if you take a trade during London, you're in profits for around 8 hours until the day ends. Yeah, for a long time. Okay, so yeah, look at this. Even during London, look how it played out. I'm sorry, even during Asia, look how it played out. Okay, so yeah, right to the tick. And then, so keep in mind, if price is reaching a point of interest during a session opening, okay, it is gonna be very high problem. Okay, so always keep that in mind. Okay, always keep that in mind. But now the thing is, can you expect sales from this area? See that? Can you expect sales from this area? No. Why? Because if this is the trade in range, now price has taken out the internal range liquidity. So what's the draw on liquidity? External range. If you look for sales here, thinking that, okay, Asian lows inducement, you'll get taken out.
Yeah.
You'll get taken out. Okay, so you have to focus on all of that stuff, not only one thing. So let's wait for that to get taken out and then look for a setup. Okay. And yeah, now London has opened. We have that. Okay, no, not yet. London opens at, London has opened. It opens at 12:30. That's my time. And what happened? When London opened, look at that.
Yeah.
Okay, look at the move. Look at the quick move to the upside. Why are they doing that? Inducements, showing people that London is going to be bullish. So people will start buying this thing. The first candle, that is what they focus on. Okay, they'll start buying this thing, but we're selling it. Okay, because why? Once again, do not jump in front of a raging bull. That's what you get taught, right?
Yep.
Okay, so no one is going to sell this thing, but we're doing it. We know their intentions. Okay, like ICT says, if price is reaching your point of interest with high momentum, it's going to be high problem. Okay, now most people will fear that. Okay, he says the quicker it reaches your point of interest, the quicker the high problem is going to be, the better. Okay, so that's the thing. Okay, so yeah, now you can have your stop loss above the strong high, no problem. That's your personal preference, but I don't like that. I'm going to have it above this wick. See that? Above this candle. And then let's see where we could target. Now it's falling. Now it's falling. And then you had a break right here. You had a break right here. And then this day, could you expect the Asian lows to get taken out? No, right? Because what has Asia done? Asia has done a stop hunt and broken structure. See that? Asia has done a stop hunt and broken structure. So which means simply Asia is a strong high. I'm sorry, a strong low.
It's going to hold.
It's a strong low. Yeah, it's going to hold. So we can use that as the low of the trading range. But how do we know the low has created the high? Here we have the break. See that? Here we have the break of a swing low. So then mark that out. So once again, if this is your trading range, what's this? Internal range liquidity. Mark that out. like this. Okay, so what's the trick I told you? Lower time frame trade in range, higher time frame point of interest. Okay, higher time frame point of interest. So on the 1 hour, we have the body of the candle right here. On the 30-minute, yeah, we had a candle right here. On the 15-minute, it makes even more clear. Look at this.
Yeah,
The candle that took out the liquidity. Right here, see that? The candle that took out the liquidity. Now, since the range is too big, go to a lower time frame. What do we have here? Breaker.
Yeah.
Refine it to the breaker. Refine it to the breaker. What makes it high probable? Liquidity resting right above that. See that? Liquidity resting right above that. So what I'm going to do is I'm going to buy it. Stop loss can go below that low, 2.9 pips, and I'm targeting external range liquidity. See that? Now it's going to be ping pong. Okay, it's going to be a sell to buy. Okay, now personally what I would do is, okay, if I have a setup like this, I will risk if for sure now this is profits. Okay, I will risk the whole profit on this buy, because that way I'm not losing my capital. Okay, I'll risk the whole profit on the buy. Okay, and then yeah, let's see what happened. It's coming down. Look at that. Look at that. Just a little tap, and right away you get the reaction.
Yeah.
Okay, right away you get the reaction. So this is why I always told you, entry below the liquidity. Okay, that is what makes sense. Okay, and then what happens? Well, outside. Okay, it is just shooting outside. So this happened during New York. This was a good New York setup.
Yep.
Okay, this happened 15 minutes after New York. Okay, so this was a good New York setup, and this is London. Sell to buy, sell to buy. Okay, from London to New York. And then you can either take your partials here, or you can take everything out and leave a runner into the higher time frame targets. Okay, as into this. Now, do you have any reason to look for buys in this area? No. Okay. Because why? Those buys were only short term, right? We are in a premium price now. We are inside of a sell zone. So what are we going to expect now? We're waiting for the confirmation. What's your confirmation? This, a strong high. Okay, a strong high getting formed. Now, look at this. Now, this is pure market structure. See? Higher highs, higher lows, higher highs, higher lows. See that? If you understand structure properly,
smart structure.
Okay, smart structure. If you understand structure properly, you can just milk the market. That's the thing. Okay, yeah. Now on the 15-minute, we do have some internal. I don't know if it gets swept, but yeah, let's wait for confirmation. I don't think it got swept. Let's see. Yeah, it got swept. Internal range liquidity got swept. So let's say we held it until here. No, yeah. I think I closed everything here, so no point of just drawing this out. I closed everything here. Okay, yeah, I'm just showing you. You could have even held it until this. Okay, but yeah, if you're really unsure, you can just close it here. Because what if they taps here and then drops like this? That can happen, right? That can happen anytime. Okay, because that's a premium price. That can happen. Okay, so yeah, we do it, and then we are inside of a sell zone. Okay, here we have our confirmation. Stop hunt, and we had a breakout structure. Yeah, stop hunt and a breakout structure. And then same thing, wait for Asia to end, look for the setup. Okay, that's why I told you it's a very consistent setup. I told that to you, right? Wait for Asia to end, look for the setup. Okay, so let's wait. Okay, Asia is over now. Asia is over. Now, what are you going to look for? Okay, now keep in mind, where are we at? We are in a premium price, okay? We are in a premium price, so we are focused on sells, not on buys, okay? Just because you had the Asian low here, you're not going to buy it from somewhere around here, because we're in a sell zone, okay? We're in a sell zone. So what are we going to look at now? Okay, we have to see if the Asian highs are strong or not. Okay, now it is strong. Why? Asia has done a stop hunt.
And a boss.
Yeah, and a breakout structure right here.
A lot of people would have usually what they do is that they see that extreme supply right there, the higher one, and they don't understand. This
thing right here.
Yeah, they don't understand what H is playing.
They might take it like this. Okay, they might take Asian highs as an inducement because they do not know about strong highs and strong lows, and then they will use it. They'll wait for this to play out, and then it will just go. That's the thing. Okay, now it's about taking a risk. Yeah, that's the typical stuff. Okay, you can't do that. You have to read price action properly. Okay, because these are the ones that, like, to do a stop hunt, who is involved? Institutions, right? So if the institutions are involved, obviously these price levels are holding. They are the ones that are protecting this. So the reason they took this out was to give another good price level. So this price level has to hold.